Room needed to avoid recession has narrowed. Bob Doll is CIO at Crossmark Global Investments. It's good to see you, Bob. You had the Chicago Fed president saying to CNBC Europe that he's cautiously optimistic that we can avoid recession. So why do you think that the path to do so has narrowed?
I think every month that goes by where the Fed says we're going to raise rates, we're going to raise rates, we're going to raise rates, and the economy slows, just narrows the window. I had hoped months ago that there was a chance we could have a soft landing, but we know they're few and far between, and I think it's going to be tougher. I suspect 2023 will experience a recession.
And when you're looking at this, are you more concerned about recession or are you more concerned about inflation?
That's a great question. I think the stock market has actually begun to shift from a total transfixing on inflation, now worried about recession. There are a lot of signs that the inflation number is coming down, and now there's worries the Fed gone too far. Will they go too fast? And in the meantime, those recession fears via earnings estimates are beginning to plague investors.
So how about stagflation? Remember that, Bob? I mean, you and I are probably old enough to remember it from the 70s and 80s. And back then, we sort of thought, I guess maybe a little bit, that we were going to be able to grow our way out of it. Right. Stagflation a worry, and can we grow our way out of whatever?
I don't think we can grow
our
way out of it. I do think inflation will come down some more, Tyler, and we'll be looking at 4 to 5% on an annualized basis by the end of the year. But real growth will be almost non-existent. You know, corporate earnings have hung in there because of pricing power. Unit growth has fallen, but pricing has enabled revenue growth to remain more robust than many of us guessed.
You know, you have all these companies talking about how they are parking cash on the sidelines right now. Do you think that that's a good plan? And at what point do you start to enter back in? Where do you see a bottom, Bob?
So picking bottoms, we know, is impossible for most of us mere mortals. But with a market this oversold, sentiment now so negative, I'm beginning to buy a few cyclicals, raise my beta a little bit, certainly still on the defensive side. So, for example, beta from 0.9 to 0.93, maybe I'll get to 0.95 because we'll get another bear market rally. But I don't think we've seen the bottom yet.
So when you say cyclicals, you're talking about companies that would benefit when the market when the economy turns up, right? And that could be a good long time away.
That's probably right, Tyler. But if we get another bear market rally, you know they will be at the head of the pack. They always are because of their big betas and big exposure to the market. And I hope I'm smart enough to buy them right and turn around and sell them right. I'm going to rent these stocks, not own them.
How much farther down do you think? I mean, where are we in this market correction or bear market?
So my view has been all along that we need to test the June lows. We obviously are in price, but we're not seeing the vengeance of selling that normally comes with that test. So we'll see. There's no playbook to say these things have to happen. My view is absent a deep recession, and if we have one, I don't think it'll be deep. I don't think we have a lot lower to go in the stock market, among the reasons why I'm doing a little shopping.